Right now, folks, we're going to jump over to our man Tim Ord as we do every Tuesday and Thursday at 30 past the hour. You can check out Tim at his website, ord-oracle.com. And don't forget, he's got a couple of great webinars right under the services tab at TFNN.com. The secret science of market tops, how to identify them, and the 6 secret ratios every trader should know with our man Tim Ord. Tim Ord, good afternoon.
Good afternoon. Good afternoon.
So we got a little bit of action today, as has been the case. We've had some volatility lately, but what do you think about this market, Tim? Go right into it, please.
We were up, I don't know, a couple of percent or close to it. Now we're off. October is a key month here. This is October right here. If you notice, this volume is higher than the previous volume over the last 3 months. The volume so when you hit a new high and higher volume, at a minimum, that high is going to be tested at some point. Where it's going to test this month or next month or even January, I'm not for sure. Normally, it's not like 5 months out. So I'm still looking for a test of the October high. The volume came in 1.178 billion shares, and the price was 689.70. Now we're down from that. If you look at today's volume, basically we got 1 week to go, not counting today, but next week's only 4 trading days, and that ends the month of November. So we're going to, if you do the average volume per week, we're not going to have as high volume this month as we did last month. And all we need to do is hit a new high this month, which we got basically a week to go, tomorrow and 4 days next week, to hit that high. And I think there's really a good chance to do it. The market's really kind of doing a lot of shakeouts here, and it's going to, my opinion, is still going to, from my statistics in the past anyhow, you're going to go back up and test the October high, and that's the key. If you test that high on lighter volume, in other words, 10% lighter than 1.78 billion shares, I have to do the calculations, and you touch that high, and that's going to be a top of some sort. At least we're going to flip the market sideways. The last time we traded a previous high in lighter volume came back at the February high. You can kind of tell it there. I drew a kind of a blue line there. If you can tell it, the volume was lighter than the last, I don't know, actually it was lighter. Looks like going back almost a year. So anyhow, it was lighter. You touched the new high. It stopped, do a doji there. Then you had the April decline into April. So I'm thinking this is going to be similar here. You're going to touch that high in October. And that's going to be either you touch it on higher volume or you're going to touch it on lower volume, 10% lower volume. So that's what I'm kind of looking for. We do have bearish signs. The bottom window is the VIX. We're going up here, hitting higher highs. The VIX was making higher lows. Kind of same thing happened back in the April or the February high. I hit a new high, higher on the VIX. So you got some bearish signs here. Do you want to be short right now? No, I don't think so. I think they're going to take a stab at the highs. The last time I put the trend reading on, this was a couple hours ago, you had a trend reading 1.53 and a 750 downtick reading. And so that market's kind of blowing out to the downside. I still think you're going to go back up, and this is the October high up here at that 690 range. I still think you're going to test that high. This was a selling climax day there. You see how big that volume is? You were trying to touch that there. If you touch it on lighter volume, 10% lighter volume, this is going to be support. So your downside is basically the October low, which is not very far from where we are. So downside real minimal here, unless you actually think the volume is going to come in. I don't have that figure, but that volume's huge, and you're not going to reach it today.
I have it right now. I'm looking at the SPY as you're going through it. Yeah, 159 million on October 10th. That's that day, right? Is that what we're looking at? 159 million 10th, on that day? Yeah, 159 million. Yeah, quite a day.
All right. So if you get through that low, you need approximately equal volume or greater. So that's unlikely going to happen. So that's going to to be where the support is. And you may not even get there, because I thought we might be driving 3 drives to the top pattern. If we do hit that low, we can't get through it. Can't get through the previous low. What the market does, it'll try to take out the previous high, and that still takes you back up to the October high. So either way you look at it, you're going to go back to that October high, and that October high is going to key what happens next. I'm still long on the S&Ps because we do have quite a bit of panic and ticks and trend. I did a horrible buy on this, but I still think the October high is going to be a key, and that'll put me in a small profit. Where I go short or stay long, I don't know. But next week's there's a high probability. I think it's 78% chance going into this is quantitative analysis, but going into Thanksgiving time frame, I think it's 78% chance that the market's goes up in November or the Thanksgiving time frame. So seasonality is one of the most bullish weeks of the year is next week, and then next one is at Christmas. So they're going to try to take out the October high. So anyhow, I'm long. I'm staying long. I don't think we're busting down here. If that busting down comes, I think it may come in January, but too soon to say right now. So I'm staying long. Gold issues.
Can I ask you real quick on that one? Is that October 10th area a critical area for you when you're watching that? If it did change, you're saying, because that one really sticks out, of course, and does it if it does break below that, like you said, is that something that you begin really watching because that's just such a critical area? Would that be because it's pretty close, like you said?
Right, but to firmly to break down below that low, let me see if I got a eraser here. I don't know where it is, but anyhow, that low is really important, just like the October high. But to get through that low, you said you had 1.5 billion shares.
Yeah, 159 million. We're close to it. We're at 135 right now, so it's probably not in 20 minutes. But if you get some other close, 159, we're at 135 right now, and you're like 2 points away. That's the reason why I asked, to see what.
That's real important, right? But you have to touch that low. You can't be close. You have to touch it. You can actually close below it, but as long as that volume's at least 10% lighter, then that probably is going to be support, just like tops once you test a previous top. All right, I hear the music. So.
And this is awesome. We'll get to watch it, and we got a little, we'll see it. I love the actionable. There's your price levels, folks. We're coming back with our man Tim Ward. We're talking the S&P. We'll be talking some gold as well. We got the S&Ps off by 86, folks. Stay tuned. We're coming right back. Welcome back, folks. We get the S&Ps off by 94. We get the NASDAQ 100 off by 2.3%. We're at session lows right now. We're talking to our man, Tim Ord. And don't forget, folks, Tim's website. You can reach him every day, ord-oracle.com. And he's got some great webinars under the services tab, right at TFNN as well. And yeah, we'll have to see, Tim. We might get that low by the time we're done talking to you.
I'm looking at it right now.
Yeah, it's about it. We'll keep everyone on the seat, on the edge of their seats as we talk about it. No, but yeah, this is quite a market for sure.
So you did 10% lighter, comes in around 1.4% or 1.4 billion shares, and if we reach that today, or less than that, we're probably okay. But I still think this is just. We're going to find support just the way the seasonality is, and a lot of times these things come on Fridays on Fridays, not Thursdays. So we're only a point away. Maybe we touch it today, and we'll see what happens tomorrow. But
Thanksgiving is sneaking up this year. I was just going to say, right? Thanksgiving coming. It's here, right?
Yeah, but yeah, those are two important areas. So that October low and the October high. So we can't get through the October low. We'll try for the October high, which I still think is valuable, because going back to this, never. Once you make a higher and higher volume, those highs are always usually tested. That's the reason why I think that's still going to happen. So we'll see how that works out.
Man, but just dreaming, that'd be a field day if we could get a range like that. That's 40 SPY points, right? And we just did it up and down within the month of October. Yeah, quite a move.
Yeah, do you got a trend reading right now? I don't have.
Sure, I think I do. Let me pull it up. Yeah, it is pushing 1.34 right now.
How many ticks do you got? downticks.
I don't have that one. I just
All
got
right.
yeah.
1 point. That's a good sign. So, actually, that October 10th low didn't have a tick or trend reading. No panic at all as far as the close goes. It was just a
Okay.
volume selling climax. And I thought that really unusual. Then the market rallied up from there. But
Yeah.
anyhow, those are the two, it looks like about 650 range to 690 range.
Yeah.
Is real key. What happens probably in the next 30 days. So let's take a look at gold. I think the
Okay.
trading range is developing here too. We had a high spike on gold in October also. 764 million shares were traded. That's higher volume than we had going back to looks like about 2024. There was one close to that, but that was the highest volume. At least a year, maybe 2 years. So that high at some point is going to be tested. So kind of a similar situation. I still think we're going to go back up and test that high up around 85. That's if you test it on 10% lighter volume, it's going to be resistance. If you test it on equal volume or higher, you're going to go through it. I think you're just going to test it and create a trading range. So I don't think we're actually going to pull back much on the gold issues because a lot of these monthly charts on a lot of especially the smaller issues are all just basically turning up right now, and there's really no retracement to be made on them because they're basically setting at their lows right now. So I think this more or less goes sideways, but I do think the S&Ps, we test that higher and lighter volume. Next time down, I think we'll break below the 650 range. That's how I view it. I think we go up and we come back down, and actually I think we break it. But too soon to say. The first thing we got to worry about getting back to the S&Ps is how this low right here, this October 10th low, is tested. So, and we'll know here probably within hours. That's either today or tomorrow. So
yeah, we're right there. Right, it's either going to figure it out because it has to figure it out almost before Thanksgiving. Because I would agree, right? You sail into Thanksgiving, and probably we're all going to look forward to a little bit of a break, pull back, and maybe things accelerate. Yeah.
Yeah, it's going to be interesting. It's going to be, and we kind of had low volatility too. Here's the bigger picture. I keep bringing this up. This is initiation of an uptrend. And this is the XAU to keep showing the chart, but this is kind of a reminder where we are on the bigger pictures. But this is the monthly XAU to the NASDAQ stocks. So when this ratio is rising, that means gold stocks are outperforming the NASDAQ stocks. When it's declining, NASDAQ stocks is outperforming the gold stocks. And it's a monthly chart, so it's a big pattern. So that's the reason why I think there's going to be a shift in monetary value, I guess you might say. I think some of these money is going to come out of the equity market and go into the gold market. But the reason why I say this is an initiation of an uptrend, this is the first time the RSI got close to 70, was back in 2001 approximately. In general, for the previous 12 years before that, the RSI pretty much stayed below 50. This is a break above that 50 range, hitting, I don't know, probably in the 60s somewhere. And that's initiation and uptrend. Like it breaks the pattern of the previous 12 years. And the same thing happened here. You had 12 years pretty much sideways where the RSI stayed below 50. This is the first time in 12 years that it got above 50. We hit 70 here, I don't know, a month or so ago. And that's initiation and uptrend. So the market changed its behavior. It's a character change. And that's what's so important about this chart. So this is a big surge in the gold issues, and this is just the beginning. You see some consolidations along the way, but once the consolidation is done, most likely you'll make higher highs. So this is a big boon, I think, for the gold stocks going forward. And it may change. If it does, this RSI will fall way below 50. They'll hit maybe in the 40s or something. If that happens, then I'll change my tune. Until that happens, I won't. So, because that RSI dictates the acceleration is the wrong word, but it dictates the XAU NDX rally phase, I guess you might say. Yeah. So if I don't know what's the right word for that. I don't know. But anyhow, as long as the XAU outperforms the NDX, that RSI will stay above 50. So we'll watch that as we go forward. Here's something else I've been kind of watching. Me and your dad talked about this for 2022 and actually 2023, I think. Or I think this is a monthly XAU gold ratio again. And if you notice, this chart goes back to 82. It goes in trading ranges. From 82 to 2008, it basically stayed between 0.175 to, I don't know, call it 0.35, give or take. And it bounced around that trading range. When it got above 0.35, things were expensive. When it got down below 0.175, things were cheap. And if you do the calculations on that, basically the highs came at, when the ratio got high, usually came high in the XAU. When the ratio was low, it came low. Well, we broke down in 2008, went all the way down where we are right now, which is basically 0.05 to 0.07 approximately. And it's been doing that since 2014. It's virtually gone sideways here. And it's an unusually long time for that thing to go sideways. It's gone sideways for 10, 11 years now. And it's due for a break, either up or down. And I think we're going to break up. So it's going to be a real interesting time.
It would make sense with how much gold is worth that those gold equities, right, would be worth a little bit more in a longer-term perspective, and maybe that's it lines up. Tim, I appreciate the breakdown, the charts, man, the analysis, as always. Folks, check him out, ord-oracle.com. There's his website right there. And don't forget about the webinars at tfnn.com as well. Tim, have a great weekend, man. We'll talk to you Tuesday.
All right. Thanks a lot. Talk to you then.
Thanks so much. Take care.